All right, welcome back. And this is Harjinder again, working through the practice questions for topic 3. This is practice question number 2, Seasons Limited. Um, we've been given information on 2 of their numerous investments for the year Jan 2015. So the first one, Jan 1st, 2015, Seasons acquired a 15% interest in the ordinary shares of Autumn Inc. for $675,000 plus brokerage fees amounting to $5,000. During the year, Autumn declared dividends of $82,000. On December 31st, 2015, shares were trading at $52 a share. Autumn had 100,000 ordinary shares issued and outstanding for the entire 2015 year. Management at Seasons classified this investment as fair value through other comprehensive income. The requirement is to provide the financial statement information required regarding the investments owned by Seasons on December 31st, 2015 for its 2015 statement of comprehensive income and the December 31st, 2015 balance sheet. So once again, we will be making partial income statement and partial statement of comprehensive income rather, and partial balance sheet. So this is in the books of Seasons. Statement of comprehensive income. Year ended December 31st, 2015. And so what will we be reporting? Any dividends we know are reported in part of the income statement portion. So under other revenues and expenses. Not interest, dividend. And under other comprehensive income, we report all the other, so any transaction costs for the year, any realized gains and losses, as well as any unrealized gains and losses. We don't know what that amount would be, so we're just going to leave it here. And the next bit is the statement of financial position. And the thing to remember here is that the investment will be reported as a long-term investment. So investment in Autumn shares, fair value OCI. Okay, so let's try and do some calculations here. Now, the number of shares acquired, we bought 15% of 100,000 shares. Autumn had 100,000 shares. Seasons purchased 15%. So 15% of 100,000 is 15,000 shares. At the end of the year, the stock price is $52. So our fair value at year end is 15,000 shares at $52 each. $780,000. So that's the amount the investment is reported on the statement of financial position. The cost had been $675,000 plus the brokerage fees of $5,000. So original cost was $675,000 plus the $5,000 of brokerage fees. So that's $680,000 the unrealized gain of $100,000 will be reported in other comprehensive income, OCI. And yeah, that's about it. Oh, what about the dividends? Autumn declared dividends of $82,000. Seasons owns 15%, so Seasons will have received 15% of $82,000 as dividend. That works out to $12,300. So dividend income is reported in the net income portion, and OCI will have the unrealized gain. So you can call that fair value adjustment, or you can call that unrealized gain, whatever you prefer. Unrealized gain, investment in Autumn. Once more, this is supposed to be reported net of tax, net of deferred tax, but we're ignoring the tax implication for now. So the first investment is dealt with. The second one, on October 1st, 2015, Seasons acquired 2,200 ordinary shares of Winter for $57,200 plus brokerage fees amounting to $1,800. Dividends of $1.25 per share were declared in 2015. The market price for these shares at year end was $22 a share. Management classified this investment as fair value through profit or loss. Fantastic. So for fair value through profit or loss investments, companies can, if they want, report dividends separately, or they can just club them together with the other items and just have a single line for investment income. So anyways, fair value at year end, the number of shares is 2,200. Market price at year end is $22. So 2,200 shares at $22 each. That worked out to $48,400. Now this is reported as a current asset, right? Under current assets, we will have FVPL investments or short-term investments. Different companies will have different names to use. So FVPL investments, that's $48,400. That's the fair value for the winter shares. The original cost was 57,200. The brokerage fees are expensed for FVPL investments. So $57,200, that was the original cost. So we're looking at an $8,800 of unrealized loss. The dividend on 2,200 shares, the dividend amount was $1.25 each. That works out to 2,750. And then the third thing is that the brokerage fees were $1,800. Now, brokerage fees are an expense, so they reduce income. So for winter shares, rather than reporting each of these numbers separately, we'll just report investment income from FVPL. And that will be the sum of the unrealized loss, the dividend, and the brokerage fees. So that's negative 7,850. We could have reported this separate into three separate lines, but there's nothing to gain there. Another thing we have to keep in mind is since we have OCI on Autumn, there should be under shareholders' equity, we should report accumulated other comprehensive income on investment in Autumn OCI, and the amount is $100,000 as unrealized gain. OCI is closed against accumulated OCI. It doesn't go through retained earnings while the shares are still being held. So that concludes question number 2, practice question number 2.